Back. Well, a traditional 60-40 portfolio of stocks and bonds has been one of the most widespread investing strategies for decades. Millennials are opting for a different approach. Leslie Picker is here to tell us what that approach is. Leslie.
Yeah, David, apparently stocks and bonds are for boomers. Millennials are way more invested in alternatives than the older cohorts. The generation with birthdays between 1981 and 1996 has about 20% of their portfolios allocated to alts, areas like private equity, venture capital, and private credit. That proportion is double that of Gen X, boomers, and the silent generation, according to the results of a Goldman Sachs survey of 1,000 high net worth individuals. Millennials are also shunning public equities relative to older cohorts, with just 27% of their portfolios in stocks, compared with nearly 50% for baby boomers. In fact, 54% of millennials surveyed perceive alts as the best exposure to growth industries, a response to the disappearing number of public companies and startups staying private for longer. This generation, of course, came into adulthood during the internet and now AI booms, enriching many of their tech-savvy peers. Millennials were also early in their careers when the financial crisis struck, which may have something to do with why they perceive equities to be riskier than older generations as well. And as we think about our role in the media, the survey asked respondents how they get information about alternatives, and the number one answers: financial TV news. Guys,
Really?
Pat on the back there. I know, I was surprised by that too. But
it's encouraging.
Important role there.
It's encouraging.
Which is why it's so important that you're covering it, actually, on CNBC.
Yes, because there is one of the big complaints about alternatives is that there's just a lack of information, a lack of transparency. Millennials clearly more comfortable with that, but they're getting their news from the media far more than any other source, including financial advisors, by the way.
Right. Now, also used to be a lack of liquidity. There are any number of different products being constructed that are going to create at least some form of liquidity, not necessarily on a daily basis, but do they understand what that means?
Yeah, I mean, in terms of their understanding of the liquidity element, of just the overall information asymmetry element, of the fee element, those are all complaints that people have made about why not to get into alternatives. It seems like at this juncture, millennials are just more comfortable with that notion than the older generations, and even perceive equities, which are liquid, to be riskier. So, I mean, I think liquidity itself is not an indicator of why they should shun a certain asset class over another one.
Right, and that's before any of this broader exposure has been formalized. Yeah, exactly.
Exactly, and it also has implications for just the next marginal buyer as these generations continue this shift. If it were to continue, what does that mean for stocks? If the marginal buyer is far more invested in the private markets than the public markets,
marginal
buying
buyers
stocks?
are good. We like marginal buyers.
We do.
Yeah.
Well, good thing there's still a lot of boomers out there.
Exactly. Thank goodness for the boomers.